Hi there, traders. This is Brad Gilbert with the Market Insight for the 1st of June. Now, I'm pretty happy to see this month go. It's been a little bit of a tough one. But just coming back to the actual markets themselves, just have a look where the US dollar is. This is a good starting point when you do come back to your analysis. Now, the dollar index happily marching along here. We saw a breakdown a few days ago. We've got that secondary sort of support line coming in around 93.60. You can see the US dollar has managed to pick itself up off the floor, and he's starting to slowly rally forward again. And that's as we approach the non-farm payrolls. Now, the first thing you really want to do is have a look where the moves come from. The adjusted consumption numbers are much better than expected. The PCE price index as well, slightly better. So there's and you got the Chicago PMI also good. Pending sales a little bit weaker, probably held it back a bit. But generally speaking, the US numbers yesterday were quite good. It gives it a bit of solid footing going into the US non-farm payrolls today. So looking at the dollar index long term, it's still screaming to the top side. This is probably just a minor correction. If we get some strong US data today, the non-farms, then you should expect this above, well above 94, back up towards 94.5, if not even higher. If it's weaker, well, we're going to see it test this trend line. The overall trend for the US dollar is still up, so I suspect we'll see some more activity there. Now, just come over and have a look at the rest of the major currency pairs. We've got, I just left the charts up here as they were yesterday, and you can see this sort of price action. The Aussie broke high here through the top of that trend line, and then just started trading sideways. Now, bit of a, I wouldn't say just generally a short squeeze. We did just come through the month-end fix as well. Looks like the Aussie and Kiwi benefited from that as well. The Kiwi has had a massive resurgence. The market sitting short and finally taking out stops above 70 the figure. We'll see how that trades out. There's more important data next week. The dollar yen was, I thought this had a fair amount of potential yesterday. I can just find my mouse. But it has actually sort of stalled as it's gone through the top of the cloud there. So it's just trading sideways. And this means it's generally lacking overall direction. No one really wants to hit it. The Japanese trade is just getting chopped up there through the cloud, and you can see how it's just sort of banging through that resistance trend line. So dollar yen probably on hold until the US non-farm payrolls later today. Euro, once again, month-end fixing. There's also, less talk about Italy, potentially leaving the Eurozone. That'll probably come out over the weekend. So I wouldn't be running Euro positions over the weekend. Not that I do that anyway, but just to let you know, it's not a good idea. And you can see the trading activity there banging up and down through that resistance trend line. You can put it down a month-end fix, put it down to a bit of US numbers, stronger US data, but it is closing back towards 117 the figure. Pretty neutral, in my opinion. Sterling, a little bit lower on the US numbers, but back trading sideways. It's a bit of a dog's breakfast at the moment. You're really looking for a bit more shape and a bit more structure around that. We've got UK manufacturing data out later today. That'll be probably a short-term trade into those US non-farm payrolls, but a chance to move there. CAD GDP figures much weaker than expected. So you can see the move down here from the previous day. Bank of Canada, took out some cautious tone out of their statement. So that's the Bank of Canada move, and that's been shoved back in its face after the Canadian GDP figures came out much weaker than expected. Okay, that was the annualized numbers. Now, if we just come across, now you can sort of see where everything is. Now, basically what we're doing at this point is just adjusting your support and resistance trend lines. This is more of a clean break on Kiwi. So I'm just going to leave that trend line there where it is. But you're just adjusting or tweaking these support and resistance trend lines to the current market. As you can see, that dollar yen is giving us too much. Euro, that was a pretty long-term trend line. I would be happy to adjust that trend line to the new level of resistance from that high yesterday. Now, drawing a support trend line doesn't make sense to me here at the moment. It's just too steep. It's got two touches. It's pretty fickle. So once you recognise that, I just generally delete it to make sure I don't sort of focus on it. If anything, you got the start of a short-term trend line there, and if I really wanted to get right into where that major support line is on euro, I'd come back over here to the daily chart to start finding out where that low is. You can see where it's broken down through 116.50, I think it was 115.50. Now that support trend line, now it's bounced back above that level. I'm very comfortable to draw that support line back in, and that tells me exactly where sort of support is on the downside, much more so than that little fickle level. So that's where my euro charts are. And sterling, well, I'll tell you what, it's a bit of a mess. It's losing all traction. It's, you know, this week's been a little bit tricky. It's been a bit up and down, but it has lost that aggressive downside momentum. So we are really looking forward to getting some of that back on track. If anything, once again, you come back and look at these support and resistance trend lines, you're really looking for 2 or 3 touches at least. Now, all we've got is the high to the current high from yesterday. That's pretty fickle too. So support and resistance on sterling isn't exactly awesome at this point. We do have a couple of trend lines here, but they're very short term and not really heavily weighted. Dollar CAD, just adjusting the low there to that low from yesterday's session. And you can see that that's trading sideways in a massive range. So pretty tricky. Now, piecing the major trading opportunities together today, you're really looking for, you know, there's some terms of trade numbers coming out in New Zealand. First thing, I'm not really that keen on those numbers. There's no significance really to those. You can have a look at the business capex numbers out of Japan, but dollar yen is neutral at this stage. I expect it to trade sideways into the non-farm payrolls. If I just scroll that down a bit, clear the screen. Now, the major activity for the global markets today is definitely going to be the US non-farm payrolls. But don't forget, we've got some manufacturing data coming out of the UK. There's some I'd say secondary numbers out of Germany in the Eurozone there as well, some manufacturing numbers. Keep an eye on those. It might give us an early lead into Euro, but sterling definitely going to be the major play in the European session. And then you come back down to the non-farm payrolls coming into the North American session. Now, the change, okay, non-farm payroll change is generally the key number to look at. You've got the unemployment rate, and don't forget the average earnings. These 2 numbers down here. That's the Bank of England and also the Fed have been focusing on the average earnings quite highly. So you've got 3 variables here. I know there's the month-on-month and the year-on-year on the average earnings. So there's 3 variables. This is not an easy trading event by any stretch. So anyone who's sort of telling you rush into the non-farm payrolls, you've got to be kidding me. You know, this is where most volatility is in the US number. It's probably the most aggressive number outside a Fed interest rate change. As I said, you've got the average earnings. The unemployment rate is probably the least important. The change and the average earnings. Now, if we do get some correlations with these numbers, as in they're both strong or they're both weak, that's where we get the real consistent move. If these numbers are a little bit variable, say the non-farm payrolls number is down and the average earnings is up, well, what you're going to get on the dollar is just a bit of whipsaw action, okay? So just be careful. This is not the, you know, like everyone talks up the whole prospect of, you know, trading the non-farm payrolls. Yeah, it can be a major opportunity, absolutely. But just be aware that it is a really loose event. Now, don't forget also, coming back into just the major markets, I mean, you've got all these currency pairs. There's opportunities coming up. If you do look across the opportunities, I mean, I'm always looking forward, like keep going forward to the next major event. And that's where you sort of really need to focus your attention is, you know, I've got down here on our upcoming events. These are the major events you need to keep an eye on. It's 11 hours until the UK manufacturing PMI, and then you've got you know, another 3 or 4 hours after that for the US non-farm payroll. So there's a long time to wait before these next major events. It's the first of the month. Traders will be waiting for these key events to get a good trade, to get the trading accounts rocking first of all. And then outside of that, the next thing you need to do is look past that. Okay, this is good. What have we got today? Where are the next major trading opportunities, even next week? And you can actually see next week is actually shaping up to be really good. There's pretty less central bank action, more key data that's going to be coming out across the board, culminating with the Canadian employment numbers on Friday. So lots of good trading opportunities next week, starting on Monday with Aussie retail sales and UK construction PMI. Don't forget, in the background simmering are a bunch of geopolitical events that you need to just be aware of, all right? So when I come back to the screens each time, I first and foremost look at the economic numbers, but then also have a quick look around the news. You know, Kim Jong-un, North Korea, Trump's always in there talking things up, talking things down. It's very hard to get a read on what Trump's actually doing. There's a lot of friction here with Canada and Mexico, again, with the North Atlantic Trade Agreement, NAFTA. So just keep an eye on that as well. That's something hanging over the CAD. But I can tell you right now, the media will turn off all sort of reference to it until it's important, until there's nothing else to talk about. And today's activity will be specifically around the US non-farm payrolls. And the dollar is evenly poised here. Could go either way. Strong US numbers. We're going to see the US dollar rally. If we need really weak numbers to get it moving to the downside. And all the US numbers have been strong. So I'm sort of favouring a stronger number, move to the top side, maybe see a correction lower in those in the other major currency pairs. Don't forget, over the weekend, this is where geopolitics really comes into play. And what I'm talking about is that European-Italian situation that has the potential to blow up very quickly. Okay, it has simmered at this point in time, but I would expect, I can't expect those right-wing parties to really sort of get along. Their sort of whole political agenda is not to get along. So I expect that to blow up over the weekend. We may see Euro a lot lower. I think at this stage, it's evenly poised. US non-farm payrolls will determine where the immediate direction comes from. At 188 is the key number. And as I said, keep an eye on those average earnings. But the geopolitical events over the weekend, so much risk. Make sure you square your positions up. And, we've got a big trading week next week as well. All right, guys, that's the market insight for today. Have a good trading session. If I don't speak to you beforehand, I'll see you in the trade zone. Cheerio.